In the chaotic financial landscape of 2025, where the dollar wavers, trade wars flare, and markets convulse with every headline, one chart has stunned Wall Street into silence. Not gold, not oil, but silver. On trading floors from New York to Singapore, analysts watched the price of silver rocket upward like an arrow released from a drawn bow, straight, violent, unstoppable. In October 2025, silver broke every record in its history, shattering levels that many assumed were untouchable. Suddenly, the Cinderella metal was no longer the overlooked understudy of gold. It was the main act, and the questions came fast. What on earth is happening to silver? Why now? And why this aggressively? The truth is unsettling. There isn't a single cause. Instead, three massive forces collided at the exact same moment: geopolitics, investment flows, and a technological revolution reshaping global demand from the inside out. For decades, the world thought it understood silver, but the explosive breakout of 2025 is rewriting every old assumption. To understand how we got here, we need to turn back the clock back to the moments in history when silver shocked the financial world and left entire markets breathless. Hit the like button, and let's begin. To truly understand the eruption of silver in 2025, we need to step out of the present moment and walk back through history into the eras when silver didn't just rise, but detonated, shaking the financial system in ways investors still whisper about today. Because the truth is simple: silver has always had a wild streak, and every time its price goes vertical, it leaves a deep scar on the markets. Our story begins in the late 1970s, when two Texas oil heirs, Nelson and Bunker Hunt, decided to rewrite the rules of commodity markets. They weren't just wealthy, they were unimaginably wealthy. And they believed silver was the key to preserving their fortune as inflation ravaged the US economy. What started as a hedge quickly drifted toward obsession. They bought physical silver, massive 1,000-ounce bars by the truckload. They accumulated futures contracts far beyond what regulators ever imagined possible. They borrowed to buy more, then borrowed again. By the middle of 1979, the brothers controlled nearly a third of the world's accessible silver. Prices erupted from under $10 an ounce to almost $50, an astonishing rise that felt more like a coup than a market trend. But all bubbles meet gravity. Fearing a systemic crisis, regulators tightened position limits and raised margin requirements. Overnight, the Hunts were forced to sell. The market collapsed violently, leaving them bankrupt and leaving the financial world stunned by the scale of what two men had almost pulled off. The lesson was unforgettable. Silver could be squeezed, and silver could destroy. Fast forward 30 years. This time, silver's enemy wasn't manipulation, it was fear. In 2011, the US found itself in a political standoff so dangerous that global markets seriously contemplated the unthinkable: a potential American default. For weeks, Congress battled over whether to raise the debt ceiling, while investors around the world watched the clock tick toward possible catastrophe. Confidence in the dollar cracked, volatility surged, safe haven flows exploded. Once again, silver became a magnet for panic. Cheaper and more aggressive than gold, it surged from around $20 to nearly $50 an ounce in a matter of months. Retail investors piled in, hedge funds piled in. Everyone wanted a piece of the action, everyone believed they could exit before the inevitable correction. But when Washington finally struck a deal, the rally evaporated. Silver collapsed, leaving scores of latecomers trapped near the top. Another spike, another fall. Another reminder: silver can seduce and silver can punish. Which brings us to today. Yes, the 2025 rally carries echoes of the past: volatility, uncertainty, and a world searching for stability. But to stop the story there would miss the point entirely. Unlike the Hunt mania or the debt ceiling panic, the current surge isn't fueled solely by speculation or fear. Silver's rise in 2025 is tied to structural forces, global politics, investment flows, and industrial demand that is reshaping the modern economy from the ground up. The past gave us warnings, but the present suggests something far deeper is unfolding. As the world crossed into 2025, the global economy felt like a machine running on shaking bolts. The US dollar, long the unchallenged heavyweight of global finance, began to lose momentum under the weight of inflation, widening deficits, and political gridlock. Meanwhile, tensions between the United States and China intensified, creating a fog of uncertainty that drifted across every major market. But the real spark came in April 2025. During a nationally televised event he called Liberation Day, President Donald Trump unveiled a sweeping new package of tariffs aimed at reshaping global trade. Metals markets braced for impact. Gold and platinum escaped the tariff list, but silver did not. That single detail sent shockwaves through the financial system. If silver leaving the US could return at a 30 to 35% higher cost, companies began treating every ounce as precious inventory. Industrial buyers hoarded, traders tightened their books. Supply, suddenly, felt scarce. Silver's heartbeat changed overnight. Traditionally, when uncertainty spikes, capital flows toward three havens: gold, treasuries, and defensive assets. But in 2025, gold was already expensive. Bonds were volatile, and equities were overshadowed by recession fears. Investors' hedge funds, commodity desks, family offices, even retail traders turned to the asset that still seemed relatively underpriced, yet deeply tied to global instability: silver. At the same time, ETFs and ETCs linked to silver ballooned in size. Every share purchased required more physical metal to be stored and held. The financial demand alone tightened the market further, absorbing thousands of tons that might otherwise circulate. If geopolitics were the match, and investors flowing the oxygen, then silver became the bonfire, catching wind from every direction. But even that wasn't enough to explain the ferocity of this rally. Because of politics and money, a far bigger force was gathering momentum: an industrial revolution built on electricity, data, and clean energy. If geopolitics lit the match for silver's 2025 rally, then technology is the fuel tank that keeps the fire burning, because somewhere along the way, quietly, almost unnoticed, silver transformed from a precious metal into something far more important. For decades, silver lived in the shadow of gold, valuable, yes, but rarely taken seriously as a strategic asset. And then, in less than a decade, the global economy changed faster than any forecast model could keep up with. The world began to run on electricity, data, and clean energy. And in that world, a single property rises above all others. Silver conducts electricity and heat better than any metal on Earth. Better than copper, better than gold, better than anything. In a world being rebuilt around electric power and digital infrastructure, that makes silver, not gold, the true kingpin. Every electric vehicle on the road today uses 25 to 50 grams of silver. It's in the onboard electronics, high-voltage wiring, battery management systems, sensors, and inverters, components that cannot function without reliable conductivity. But that's only the beginning. Automakers are racing towards solid-state batteries, and many of the leading designs rely heavily on silver-based materials. If this technology scales, a single EV could require up to 1 full kilogram of silver. Multiply that by tens of millions of EVs produced annually, and the numbers stop being demand projections. They start being warnings. AI is not just software and models. It is a physical empire built on semiconductors, GPUs, servers, cooling systems, and high-density circuitry. Silver is essential in advanced chips and high-efficiency electrical pathways where even minimal resistance matters. Every data center expansion? Silver. Every new generation of AI chips? Silver. Every hyperscale cluster powering an LLM or robotics platform? Silver, again. The more intelligence the world produces, the more metal it consumes. Solar power alone accounts for roughly 25% of global silver demand, and that share is growing. Silver paste is used in photovoltaic cells to transfer electricity with minimal loss. Every gigawatt of new solar capacity requires tens of tons of silver. And as climate commitments accelerate across the US, Europe, China, and India, solar installations aren't just increasing, they're compounding. Analysts already warn that the solar industry alone could consume over half of global silver production within the next decade. EVs are accelerating, AI is scaling vertically, solar is expanding globally. Each of these forces individually would have tightened the silver market, but all three exploding simultaneously? That's not a trend, that's a structural transformation. And while demand climbs at exponential speed, the supply side refuses to move with it. Production is flat to declining, stockpiles are shrinking, and the gap between silver on paper and silver in warehouses grows wider every month. This collision, extraordinary demand meeting constrained supply, is the force propelling silver into territory investors once considered impossible. If demand for silver is rising like a tidal wave, then supply is the shoreline pulling back quietly, steadily, and ominously. And it's this silent retreat that turned silver's 2025 rally from a short-term spike into something far more structural. For more than a decade, global silver production has been drifting downward, not because the world needs less of it, but because extracting silver is far more complicated than most investors realize. Unlike gold, silver is rarely mined for its own sake. Only 28% of global output comes from primary silver mines. The remaining 72% is merely a byproduct of digging for copper, lead, zinc, or gold, which creates a dilemma. Even if silver demand skyrockets, production can't simply scale with it unless those other metals boom too. And right now, they aren't. Across Latin America, home to the world's largest silver deposits, the story is one of contraction. Argentina shuttered multiple mines due to soaring operating costs. Peru faces depleted ore grades and ongoing local unrest. Chile struggles with infrastructure bottlenecks and declining yields. Only Mexico and Bolivia show modest growth, nowhere near enough to offset the regional downturn. The effect is unmistakable. Global supply is tightening faster than forecast. Look at the vaults of the London Bullion Market Association, the largest silver stockpile on the planet. In 2022, roughly 31,000 tons. By March 2025, just 22,000 tons. A staggering 30% drop in 3 years. And most of what remains is locked inside ETFs held, not circulating. If ETFs don't sell, the physical market starves. When the physical market starves, prices spiral. In October 2025, borrowing silver for short positions cost traders annualized rates near 200%. Some even flew silver by air freight because there was none left on commercial shipping routes. Silver isn't just rising, it's becoming scarce, and that scarcity forces us to confront the question at the heart of this entire story. As we step back and look at silver's explosive rise in 2025, the story begins to resemble a grand theater production, one where every major force in the global economy walked onto the stage at the exact same moment. Geopolitics, investment flows, technological transformation, and a tightening supply chain that no one can quickly fix. It's no surprise then that major institutions are scrambling to update their models. BNP Paribas even issued a forecast that silver could reach $100 per ounce by the end of next year. A number that once sounded outrageous, but suddenly doesn't feel so distant. Yet the question remains, is silver forming another speculative bubble, or are we witnessing the first chapter of a structural revaluation? Historically, silver spikes have been driven by fear, leverage, or financial panic, but this time, something is different. AI isn't slowing down. Electric vehicles aren't slowing down. Solar and clean energy investment definitely aren't slowing down. These industries don't trade on emotions. They consume metal, real, physical silver every single day. And with supply shrinking and inventories being drained, the market is becoming more fragile, more sensitive, and more exposed to shocks. Still, no rally is invincible. Silver can rise with breathtaking speed and fall just as brutally. The Cinderella metal has a history of lifting investors to the clouds, then dropping them without warning. Caution is not optional, it's mandatory. So the real question we face isn't just about price targets, it's about perspective. Are we standing at the edge of a bubble, or at the dawn of a new silver age shaped by technology and scarcity? I'd love to hear your thoughts. Are you bullish on silver's future? Or do you believe the market is racing toward danger? If this deep dive helped you understand the forces reshaping global finance, don't forget to like, subscribe, and hit the notification bell. We have many more economic turning points to decode together. This video is for informational purposes only, not financial advice. Goodbye.